It's 6 o'clock in London, it's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. The IPO-VID live stream, Series 12, Episode 6, that amounts to Episode 72, starts here. All the very, very best to the Security and Futures Commission of Hong Kong CEO Ashley Alder. He's finally heading back to the UK and he's going to take over the role of chairman of the UK regulator, the FCA. All the very, very best to him, and he's going to maintain his chairmanship of IOSCO at the same time. Quite a surprise to see so relatively early into Ashley Alder's latest Hong Kong contract, but certainly it's going to be a very, very interesting time for him returning to the UK under a new Prime Minister. Meanwhile, our parish is getting bigger. We welcome a new Indian exchange. The Hindustan Power Exchange is coming in alongside the industry leader there, IEX. No, not the Flash Boys, but IEX, the Indian Energy Exchange. And that's going to make the third power exchange in the country. Very, very interesting to see what goes on there. I mentioned earlier what has been going on in the UK. We're getting a change of government. Well, at least it's going to be the same party, but we're going to see a change of Prime Minister with the passing on of Boris Johnson in order to manage to deliver a whole new interesting summertime election shambles, really, as just about everybody in the country seems to be running for the leader of the Conservative Party today. Obviously, that's got a lot of people exciting. Quite a few people are worried about what's going to happen in terms of regulation. Even the loony Brexiteerian fringe Contras, the Remainers, the Ramoners, they seem to think that they're actually going to be able to undo Brexit. I think not, once that manages to hit the people of the UK. Nonetheless, some very, very valid concern amongst the parish. We saw this week Alistair Haynes of Aquis Exchange being quoted concerned about the Financial Services and Markets Bill in the UK, which looks as if it will now not be passed before the summer recess. Very concerning altogether, because it's about time that we got going with Brexit and got the deregulation that the common law system of the United Kingdom deserves away from the European Union. Finally, this week, you can catch this on LinkedIn and Medium. If you're not already a subscriber to Exchange Invest, subscribers there saw this last week. We've got some edited highlights of the National Stock Exchange of India's Holy Hoax Fines fiasco. To date, there have been, good grief, something like $8 million US, which amounts to a gazillo billion something or other crore rupees, for those of you who can do those calculations in your head. Leading the field has been, of course, the NSE itself, with Chitra Ramkrishna coming up a close second, and the mysterious, some might say, rarely photographed Anand Subramanian coming in third place. More fines coming here, actually, I do believe, in the near future, because we have seen a whole new investigation into phone tapping in India. Frankly, Brazilian telenovelas have got nothing on the activities of the National Stock Exchange of India over recent years, and that's led us to that interesting article. You can catch that via our pages on Medium and LinkedIn. Our guest today, ladies and gentlemen, is John Kim. We're going to be talking about CBDC, central bank digital currencies, and the future of money. John Kim is co-founder, chief strategy officer, and general counsel of Movmint, the world's first retail CBDC creator. In 2020, John, who's a former partner at Norton Rose Fulbright's global fintech group, led the team that won the prestigious Central Bank Publication Advisor of the Year award for Fintech and Digital Projects. In addition to his role at Movmint, John teaches at the University of British Columbia School of Law. So here we are, ladies and gentlemen. The topic tonight, ask us a question. If you've got something, send us a little bit of love if you get a chance. We'd really appreciate it, because it helps get this IPO-VID further up the live stream rankings, whether you're watching us this evening on Facebook, LinkedIn, or YouTube. John Kim, CBDC and the future of money. Greetings, John. Good afternoon to you. Good morning to you, perhaps. Where in the world are you today?
I'm in Vancouver, Canada. So it's good morning for me. I think it's good afternoon for you. And I understand, good evening for the majority of your guests right now in Europe.
We've got, people all the way across the world talking to us across multiple time zones. Ladies and gentlemen, if you've got a comment or a question for John, do feel free to send them to us at any points in time. Let me say good evening, Peter Secon. Lovely to see you with the show this evening. Hope Ari is very, very well, and it's a delight to see you joining the show once again. So, from the heatwave of the United Kingdom, where Peter Secon is today, tell me, John, a little bit about your career, because you started firmly in the legal profession.
That's right. With maybe a bit of maybe a variation on that. So I actually started my professional career in the investment banking industry, and then transitioned to law, practiced law primarily in Canada. And was a corporate commercial M&A lawyer for almost 2 decades, which is kind of a scary thought, and that's dating myself, which may be a mistake. Then just say post Bitcoin run 2017, 2018, I got extremely lucky and happened to work with a group of extremely talented and innovative individuals from a number of different organizations, but who are all working on various aspects of cryptocurrencies and the underlying blockchain technologies that power it. And through that exercise, I got to learn a little bit about the technology and its use cases, and just became fascinated with how transformative it could be in this new and digital age. So that eventually led to the creation of the company. We got the group together. We successfully bid for the Sand Dollar project, which was a CBDC project issued by the Central Bank of the Bahamas. It was the first live CBDC, and it eventually became the first live CBDC in production, live and in production, so not a pilot. And it continues to be iterated and continues to grow today.
So very interesting. So explain to me a little bit about the gestation of Movmint. Did you come together because you saw the direct opportunity in the Sand Dollar, or were you already working on a CBDC business at the point when suddenly this tender came along?
Yeah, no, it was really, all of us were working on different aspects and different use cases and applications of cryptocurrencies. I think if there was a very strong sense of trying to effect change at scale for all of us. And we were all at a point where we came to the realization that to achieve scale, to actually affect change, you needed scale. To achieve scale within a reasonable time frame, i.e., within our lifetimes, you either had to grow extremely quickly, like a Facebook, very, very rare and very, very difficult, or you had to leverage or work with elements of the existing financial system or existing centralized system. And that's where, of course, obviously the at least the ethos of blockchain, in particular at the time, that's where it ran sort of counter to some of that. But we understood from the early days that especially when it comes to financial systems, the goal shouldn't be disruption. One of our favorite sayings is it's a quote by Jack Bogle, who was the former founder and CEO of Vanguard Fund, and as I understand, I think he was the creator of the first index fund. And I think his quote is that, at least in the finance world, innovation tends to only benefit the innovators. And we wanted to avoid that. We needed to grow. we needed to work on something that could scale and affect change, positive change, relatively quickly. So we were all in that mental headspace at the time. And then this RFP came along from the Bahamas involving central bank digital currencies. It was very new at the time. Nobody really knew what CBDCs were at the time. In some regards, that might still be the case. It's still a relatively new field and new technology, or new application of existing technology, shall we say. But it became extremely important. It became extremely interesting to us, just again because of the opportunity to work with central banks to try and bring digital currency to everyone, which I think was one of the original goals of the cryptocurrency movement. And yet, especially at the time, it was failing miserably just because it was so fractured. And as you'll recall, Patrick, 2017, 2018, that was really at the peak of the ICO craze. And it was a kind of unfettered kind of financial transformation that probably did more harm than good to the overall movement. And so we became very disenchanted with all of that and wanted to find a different way.
It's fascinating, isn't it, John? I mean, you're talking about these things and then you say, that was happening in 2017, 2018. And unless we've all been aging like basset hounds, it feels as if it was almost last century, doesn't it? It's quite incredible. I mean, you mentioned the ICO craze, and I'm suddenly thinking, God, that takes me back. Yeah, I remember that. Yeah, absolutely. And actually, you look at the inventions of money. It's just so interesting because, okay, I mean, I can remember writing about money in Capital Market Revolution, the future of money, and explaining to people that eventually all money could be digital, and everybody just fell about laughing. And I think at the same point in time, you had people like Nicholas Negroponte around the late 1990s. They were going through demonstrating the fact that in future you'd have like liquid paper you could read a book of, and that just caused people to be lying flat on their backs with their arms in the air, just waving around like swatted flies because it's so hilarious. And yet here we are. We've gone through a multiplicity of exciting developments in recent years, but maybe we could talk a little bit about that development of actually how we got to CBDC, because we went through a whole parallel thing of sort of stable coins and so on, which has been, how might one put it politely, a little bit tortured in its development, let's put it that way, reaching the CBDC concept. Yeah, no, that's right. And again, CBDC, the idea of digital currency has been around for a while, and to us, it's just really just the natural evolution of money. Cryptocurrency came along and filled a need and a gap, or a demand, a desire. When it did, but at a time when central banks, who were at least, if you go back a few centuries, central banks have by and large been the primary issuers of currency, trusted medium of exchange, and it's just that once that came along, once the central banks, it was just natural for central banks to start thinking about issuing their own digital currencies. The fact that crypto came along when it did, the fact that you had larger organizations like Facebook considering issuing their own form of cryptocurrency, I think that gave a jolt to the system, and that motivated a lot of the central banks to really take this seriously. But I really think that bull run in 2017, that Bitcoin bull run 2017, the ICO craze, all of that really brought cryptocurrency into the mainstream consciousness, and that helped spur some of the innovative thinking among central banks. So, because right now where we are, I'm sure many of your guests are already aware, but according to the latest BIS survey, something like 90% of the world's central banks that they've surveyed, representing over 90% of the global GDP, are at various stages of looking to use or implement CBDCs. But what's more fascinating for me is that
30% are looking to deploy it within the next 1 to 3 years, and 68% within the next 6 years. So CBDC is quite literally the future of money, but it always has been. So it's just a natural evolution of things going digital. It shouldn't really be a surprise. What's a surprise is that it's taken us this long to even think about doing it this way. But as with, I kind of equate all of this to the way we used to pay, those of us who remember, we used to pay a king's ransom to make long distance phone calls. And those days are mostly gone. We don't pay very much for long distance phone calls, but that's what technology does. It accelerates things, it expands things, it cheapens things, it makes things much more accessible, and it's much more scalable. That's what technology does. And I suspect with digital currency, that's we're well on our way, and we'll start seeing some really fundamental changes to the way we pay for things. We're already seeing it now, but we'll see more changes coming very, very soon.
Fascinating altogether, John. Let me give you a chance to pause for breath there and say hello to a few of our loyal viewers. Hello, Ian Bonsor. Great to see you this evening. Also good to see David Delahunty, evening campers, and good evening to you too, David. Lovely to see you back with us. Simon Huckle, regular viewer. It's great to see you too, Simon. I hope all is well with your business. That's super altogether. Thank you so much for joining us this evening. If you've got a question about the future of money, John Kim is our special guest this evening. He is a co-founder of Movmint, and they've been supplying, amongst other things, the CBDC framework and background for the sand dollar in the Bahamas. Very interesting what you're talking about, John, in terms of developing the consciousness and actually how long it took central bankers to really come to the party. I mean, my goodness, only this week do we finally see something come from the Bank of International Settlements where they're actually going like, whoa, this central bank digital currency thing has a future, it's important, and we should really be doing it, which I think is quite shocking that it's taken them 20-something years. I mean, they went through a long decade of denial where they refused to listen to people like me that such things were going to happen. But, I mean, central bank digital currency itself, it's easy to say, 4 letters, CBDC, but everybody thinks that they're all homogeneous, whereas actually there are clearly a lot of different possibilities in the model and design of a CBDC.
Absolutely. I mean, actually, you hit it on the head. It's actually key to understanding there's many different kinds of CBDCs as there are different kinds of cryptocurrencies, right? It's not monolithic at all, which is why it's so, and it's important to understand that because there's probably, as with all things, especially these days, but as with all things that are new, there tends to be a lot of disinformation or misinformation, or even just flat out ignorance about something. CBDCs, I mean, conceptually, it's just digital. It's just a digital bearer instrument, right? Issued by a central banking authority. It's fiat money in digital form. Just like cash, it is a liability. At least the technical conception of CBDC is it's supposed to be just like cash. It is a liability of the central bank, and it is legal tender. And again, it's a digital bearer instrument. But once you're past that, how you conceive of it, and the underlying technology used, how it's architected, what its features are, all of those are by and large dependent on the decisions made by the central bank that wants to deploy it and use it. And so what that means is different strokes for different folks. Different central banks will have different priorities for why they want to introduce CBDCs. Just by way of shorthand, I actually like to conceive of CBDCs. I think of central banks and the world, how it's divided into sort of G7, G20, and the rest of the world. I find again, this is it's just a general observation that the G7s, their view of CBDCs and why they're considering it and their priorities are very different from the G20s and are very, very different from the rest of the world. Certain things that that England may or may not need, very different from what Ghana may or may not need as far as introducing a digital bearer instrument is concerned in those jurisdictions. So as you say, no two CBDCs are really alike. The feature sets are varied, and truth be told, it doesn't even have to be blockchain based. There are elements. There are many elements. I mean, China's an example, but so is the sand dollar. And it's interesting that we developed our system almost in parallel with the DCEP in China. And what we later discovered, sort of almost years later, was that many of the features and many of the decisions, as far as the architecture is concerned, were quite similar. And so, for example, our system, and again, without trying to avoid getting into trouble with our IP counsel, without revealing too much, ours is a hybrid system. For example, Sand Dollar is. It's not completely blockchain. Blockchain is good for certain things. It's terrible at others. One of the things it's really bad at is actually throughput and being able to transaction speeds. And so we had to hybridize the system in a quite innovative way that leveraged the best aspects of blockchain, some of its features of immutability and security, but had to go with more traditional database systems to help with the throughput and the transaction speeds that are necessary to be able to power a true digital legal tender flowing through an economy. And so going back to the original point, all of these design choices, and in particular, things around privacy, for example, that's another big one that people fear is that, oh, CBDC will lead to a police state. And I don't even know where to begin to try to address something like that, because if you're living in a police state now, probably CBDCs will be used to turn your society into more of a police state. If you don't live in a police state now, odds are CBDCs will not be used to turn the place into a police state. Right? It doesn't mean you just like let it go. I'm just saying that it's very dependent on the jurisdiction and the central bank. And you can't just, it's not a box solution. It's not a piece of software like Microsoft Word where you just kind of like deploy it in a jurisdiction and voila, it works. That couldn't be farther from the truth. It's the key lesson. I'm just going to leave at this point. It's the key lesson that those of you who are familiar with M-Pesa in Kenya, that mobile money solution that sort of kind of like grassroots, it kind of grew out of a really interesting piece of technology that allowed essentially the tokenization of mobile phone airtime, and that allowed people to essentially convert cash into digital cash. It took about 13, 14 years for that to grow to scale, and to a point where it had like 42, 43 million users. A lot of NGOs at the time thought, aha, so this is the solution for the unbanked and for the rest of the world, and certainly for the rest of the continent of Africa. And they basically tried to take M-Pesa and try to essentially just kind of transplant it to various other jurisdictions, and failed miserably. And of course it did, because it's, again, money is not a box solution. Each jurisdiction, each country, there's something called sovereignty, and currency is intimately tied with sovereignty or concepts of sovereignty. It's also the reason why we internally we understood once Libra, then later on it was called DM, the Facebook digital currency project. Once it was announced, we understood early on that was probably not going to succeed. And again, it was because it's not like social media where, oh, cute idea, you can just have everybody in your jurisdiction kind of use it, maybe with some certain regulatory boundaries, but by and large, that's maybe a box solution. Currency is different. Sovereignty matters. Governments matter. All of these concepts, they're not going to go away. You can ameliorate it, or you can fiddle with it. You can adjust it, especially along the edge cases. But you could almost say that unless there has to be, to my mind personally, I think there has to be a radical radical reordering or changes to our biology / a radical reimagining of our whole social architecture. Things like free energy, sovereignty doesn't matter, no more borders. Those kinds of changes have to happen before digital currency becomes something that's like a block solution that you can just transplant to any jurisdiction and just press a button.
Yeah, I think that's a really, really fascinating point altogether you make. I mean, you've unpacked various things all in one go, but
sorry.
the differences, no, but the differences in sovereign money and how it's used in different countries, and equally the way that essentially there's a sort of Anna Karenina principle to money, isn't it? I mean, all currencies that are going well are all uniformly happy, but the ones that sort of aren't going well, they're all unhappy in their own particular way, or they're all failing in their own way. And I think you unpack something that's really, really interesting, which is this ongoing, the G7, the G20, and the rest of the world. And I mean, you look at capital markets, where obviously you come from originally, and one of the things that's just hilarious are these discussions that go on. I mean, like Pittsburgh in 2009, when they were discussing the post-Lehman environment, and there were at least 6 or 7 countries in the room, and people were discussing central counterparty clearing of swaps and why this was really essential. And you can just imagine there were half a dozen countries who were all sitting looking out the window going, la, 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 la. Any good Pokemons here? I mean, whatever, because they've no idea. And I mean, money is such a different thing for everybody who goes there. So actually, let's get to sort of a few quick fire questions. I mean, one, you mentioned the UK, the USA, those sorts of really mega, I would say, hyper-financialized economies. Britain has a huge debate going on at the moment. Now, I'm not asking you to opine per se on which side of the debate you come down on, but there are very sort of almost rabid rival factions. One of them wants something that goes to the man in the street, and a lot of the movement is actually for a wholesale CBDC. Perhaps you can explain to us kind of what the debate is there.
Well, and so I'm not. So in a way, I almost don't see it as a debate per se. As I explained earlier, so the idea of CBDCs, it's fiat money in digital form issued by a central banking authority. It's legal tender. It's a digital bearer instrument. It's a liability of the central bank. There you have. At that point, you can have 2 different concepts. One is being something called a retail CBDC, and another being something called a wholesale CBDC. And the idea of retail CBDC is, again, it's a digital bearer instrument. It's a digital form of the cash that you have in your wallet. Although it's a quaint anachronism, because truth be told, I haven't had actual cash in my wallet. My wallet actually is kind of pathetic. It's just, it's a piece of a leather that holds together a bunch of cards. I haven't actually had cash in it for many, many years. And that, again, speaks to the kind of society that we live in today. Transactions are digital, but that's not the reality for a large portion of the population. And so, again, you have retail CBDC where every person has access to this digital bearer instrument issued by the central banking authority. Okay, wholesale CBDC slightly different, and I guess you can cut it many different ways conceptually, and I certainly don't want to go on about it too long. But wholesale CBDC is something that essentially is the same, but it can be used for payment and or as collateral for settlement obligation, or as an asset that could be purchased and exchanged bilaterally between banks or other systemically important financial institutions. The idea is that it would only be accessible to these systemically important financial institutions and service providers rather than end users like consumers and merchants. And I suspect what's happening in places like the UK, and again, the G7s, is this, and I think this was literally the words used by the House of Lords, I think back in January of this year in England, is CBDC a solution looking for a problem, or something along those lines? And for many of the G7 countries, that might actually be true. And it just speaks to the relative robustness of the infrastructure, the digital infrastructure, the payments infrastructure that are already embedded and in place. As inefficient and as impervious to further innovations as those systems might be, you have a system that kind of works still for the majority of the population. Not everyone. You'd be surprised at some of the figures of the people who are unbanked or underbanked in so-called advanced societies like the United States, even in Canada, especially in some of the more remote areas. People don't necessarily have access to some of the digital infrastructures that the vast majority of us take for granted. And so that's where you can get this debate around, look, is this something that only systemically important financial institutions can really leverage and make use of? Again, you can see some of the benefits, just in the exchange industry, for example, having a digital bearer instrument that everyone can agree on and accept and use as the medium of exchange. You could see how that can shorten the value chain. That could certainly, at least in concept, if not cut out, or at least certainly optimize the middle people along the chain of settlement, where it's no longer T+3 settlements, it's T+1, T+0 even, at least in theory. So efficiency gains there. And this is something certainly that's being explored in places like Switzerland and Australia through various sort of wholesale CBDC type projects. But I suspect I suspect for the majority of the G7 countries, many of the policymakers still don't really appreciate the need for a CBDC, at least not at the retail level, simply because I think the idea is, well, we already have a system that seems to work for the majority of the population. So what's the innovation there? Certainly, if you were to ask the merchants in those jurisdictions, whether it be Canada, United States, or England, especially the small to medium-sized businesses, they would say, look, the merchant transaction fees that we get charged by the Visas and the MasterCards of the world, I mean, those are super expensive for us. Even for the average person, just being able to send money can be actually quite expensive, especially when you're trying to send money overseas. And that's where things get really, really interesting. Whether at a wholesale level or at a retail level. The idea that, in the same way I used the long distance telephone analogy earlier, how less than a generation ago, I mean, just a few decades ago, calling long distance was a big deal. It would cost a small fortune to have any sort of at-length conversation with loved ones and friends. Today, of course, with the availability of online chats and applications like WhatsApp or Signal, few people even think about paying long distance fees. That's just the thing of the past. You can imagine sometime very soon, you can see how CBDCs and cross-border payments can be radically accelerated and changed, where you could start sending money in a peer-to-peer fashion almost instantaneously. The technology exists, right? It's really the regulatory frameworks and maybe a little bit of a lack of imagination and a bit of political willpower that's stopping us from actually making that a reality. But it's also the reason why you have organizations like existing incumbent organizations like SWIFT, so interested in being in the CBDC space. The question, of course, is, can an incumbent imagine things where they can disrupt themselves? History has probably shown that long existing incumbents are not very good at self-disruption, right? Those are very few and far between, but who knows? But again, I think that's where our focus as a company, I can just share that, this debate, wholesale, retail, we don't think it's much of a debate. For us, different countries, different jurisdictions will have different focuses. And for us, our primary goal is to bring this to the majority of people in the jurisdictions that actually need it at a more visceral, real level. And the reality is anywhere from 1/3 to almost half the global population do not live in the reality that you and I live in, Patrick.
Yep.
They're not in air-conditioned condos with fully digital and credit cards and access to online banking. They don't have any of that, right? That's not a reality. And so That's why the non-G20 countries, the majority of the world, and arguably the majority of the global population, they're the ones that will adopt this the fastest. And of course, with faster adoption of technology, the idea is that they might actually catch up a lot faster.
Well, of course, you get to the whole idea. I mean, where M-Pesa, for example, had so many data centers that have been situated underneath the pylons of mobile telephony, because actually nobody uses fixed line telephony in Kenya. It's almost non-existent.
That's right.
You're discussing the whole cost base. Yes, in my lifetime, I think we've gone for transatlantic telephony from more than $12 a minute down to, as you say, so cheap that actually some countries in the Middle East have tried to ban it and ended up with riots. Lebanon being a very good example, because there was no other way to actually keep the state telephone monopoly going. So they introduced a WhatsApp tax and probably found that that was the worst thing they could manage to do in the modern digital age, because they stopped everybody talking to whoever they wanted to talk to and message on WhatsApp. Really, really interesting. Let me just say thank you very much. Good evening, Ian Miller. It's a pleasure to see you here today. I hope you're enjoying this discussion. We're with John Kim, Strategy Chief for Movmint and also a founder of that company. We're talking about the future of money, CBDC and the future of money specifically. We got two great questions in here. I'm going to come to your question in just a moment, Jane. First of all, we've got Beata Young. Lovely to see you this evening, Beata. Thank you very much for your question. Hello, John and Patrick. Great discussion. How does the Bahamas sand dollar work as a digital currency? Good question.
Yes. In the Bahamas, the sand dollar is a retail CBDC. It's issued by the Central Bank of the Bahamas. The idea is that every person in the jurisdiction, you don't have to be a resident, every person. So let me clarify that. What that means is the Bahamas, its fixed population is somewhere around 500,000, give or take. Maybe if you include the migrant population, that might balloon to maybe about 600,000, maybe even 700, maybe somewhat less than that. But if you take in sort of the transitory, the tourist population, you're probably looking at something closer to maybe 7 million. That's the addressable market. The idea is that every person should be able to access a digital wallet that can store and transact in digital sand dollars. The sand dollar, again, is it's token-based technology, and so each digital token unique, and so no different from the serialized banknotes that you have. Each one is unique. The idea is that to be less disruptive to the existing financial system, the idea is to work through existing financial institutions, banks, payment service providers, systemically important financial services companies who will onboard and go through the KYC, the KYCing of users and clients, and allow them access to a digital wallet that these financial institutions will issue on behalf of the Central Bank of the Bahamas. There's greater distinctions there, and I know that certainly if our chief of engineering was listening in on this, like he would probably rolling his eyes at how grossly I'm simplifying things. But
I mean, if I may offer one huge simplification, because obviously I can say this and I haven't developed the sand dollar as you have. I mean, one issue here is essentially that there is the Bahamas dollar, which is pegged one-to-one with the US dollar, but nonetheless is its own separate currency. And clearly the Bahamian government are eager to try and keep the Bahamian dollar holders, which are the Bahamian residents, in their Bahamian dollars. But at the same time, they're very keen to try and facilitate foreigners coming in and not ending up locked into the Bahamian dollar. So therefore they can buy sand dollars and easily transfer that back to USD when they leave the country again. Is that correct?
Yes and no. So there's a cross-border component to CBDCs, obviously. The Bahamas isn't there yet, nor is any other jurisdiction. By and large, CBDC right now, conceptually, the cross-border, that's the next evolutionary step in this. It's just a no-brainer. right? Anything digital can be transmitted as easily from across the city or from the person sitting across from you at a coffee table to across the globe almost instantaneously, at least in practical form. So that's the next step. But as far as the currency is concerned, it's domestic only. The idea, as you say, though, the Bahamian dollar is pegged 1-to-1 with the U.S. dollar, and thus so is the digital sand dollar. It's the same in digital form. It's the same as the fiat currency that the Bahamas Central Bank issues. And again, the idea of the sand dollar is to allow everybody access to it. Now, when I say everybody, it's not unlimited transactions, right? The way you get around the issue of KYC, it's a delicate balance, and AML and CFT concerns is what the Bahamas has done is they've introduced a tiered, what they call a tiered wallet system, where there's an initial introductory wallet that everybody, virtually everybody has access to. Doesn't matter who you are, what your background is. In concept, it's supposed to be, and whether or not you have proper KYC documents or not. And the idea is that systemically you protect against nefarious actors by limiting the feature set of that introductory digital wallet. There's only a certain amount of Bahamian digital dollars, the sand dollars you can hold at any given time, and there are limits to how much you can transact at any given time. If you want a higher tiered wallet that allows you greater access to higher degrees of functionality and funds and transfer limits, then you have to go through proper AML, KYC type procedures. But at least initially, the closest analogy is probably the wallet in your pocket that you're supposed to be able to use. But that US peg 1-to-1 and the idea of being able to transact internationally, that angle is actually something completely different. And maybe we can get into that in more detail a little bit later.
Excellent. That's really, really interesting. Well, first of all, I'd like to address, thank you very much, Bata, for your question. That was really, really interesting. Here's a good one from Jane. Hello, John. What are the challenges for CBDC, specifically on the vulnerability to cybersecurity attacks? Yeah, and you know, in theory, any system is vulnerable. But all I can say on that is, you know, the idea, and again, this is why you go through. This is why CBDC isn't something that you implement overnight, and this is why this isn't something that you implement in a few months' time. It takes a very long time for you to harden the system, and it requires continuous monitoring and updating. And all I can say is that you're absolutely right. Security can be an issue, but that's where certain feature sets like blockchain and other protections are put in place and implemented to prevent cybersecurity attacks and vulnerabilities. It is an ongoing process. I don't particularly see it as a challenge per se, as long as it's done correctly. And again, this is where you know, the central banks have to be very careful in the vendors that they work with and how they implement the system. We obviously hear about hacking attacks. You know, in the early days, I think there was a lot of conflation with, blockchain can be hacked, Bitcoin can be hacked. What the headlines were really talking about was that the exchanges that dealt with these cryptocurrencies, they were the ones being hacked, and not the actual blockchain. And in the same way, you have to be very careful in how you implement the cybersecurity measures. Without doubt, again, it is front and center on the minds of
of the central banks, because obviously you don't. It's the currency system for the entire jurisdiction, the entire country. So you want to make sure that it is secure. It is not. It is not an impediment to its adoption. There are enough innovative and smart and constantly evolving anti-cybersecurity measures or cybersecurity measures that can be implemented. And so, to the extent that we live in a digital world, it's always a risk, but the countermeasures also exist.
Very interesting. Thank you very much, Jane, for the question. Certainly good to get into the cybersecurity element of things. So, John, I mean, we've talked a bit about wholesale currency. We're talking this evening about CBDC and the future of money. You've explained how there are different variations in all of these sorts of ways that they go forward. Let me just say hello at this point in time to Marcus Ward. Good evening, Marcus. It's lovely to see you. Hope all's well in your world. And actually, I'm going to jump straight to your question. Ian Miller, hello again, Ian, has asked, if exchanges are fully regulated, surely this would help to alleviate any cybersecurity measures.
Actually, I'm not quite sure if I understand the question. Is this in the context of CBDCs or?
I think it's probably in the context of CBDCs per se, but also probably going back to your comments just a moment ago about cryptocurrency and so on. And therefore, truly, as we know, it was the Wild West of crypto exchanges that tended to get the hack the most.
No, absolutely. For me, I think if I've understood the question correctly, there's certainly, if you look at the kinds of scenarios where there have been breakages in cybersecurity, a lot of it sort of relates to, a lot of it isn't an issue with the actual technology. A lot of it is because of people. People somewhere along the way they messed up, and in more cases than not, oftentimes it's actually somebody on the inside. I think the idea of and I take it here, the idea of exchanges is really crypto exchanges. That would certainly bring standards to the industry, much needed standards to the industry that would increase cybersecurity. I completely agree, and I think that's another reason why we need greater regulation in the crypto exchange sphere of the business. It's when it was the Wild West, right? You just threw together any sort of different components, and you throw up an exchange and advertise yourself, and suddenly, voila, you were dealing. But of course, at the same time, because there were so few of these, at least in the early days, you were dealing with a lot of cryptocurrencies, and so the potential risk to the overall system posed a much greater threat. But so absolutely, if you have greater regulation, then presumably you would have higher standards of including how you implement appropriate cybersecurity measures.
Thank you very much for that answer. We're here discussing with John Kim, CBDC and the future of money. Thank you very much, Ian Miller, for the question. Really appreciate it. It actually makes me think about something, which is, you've talked quite a lot about how much interest there's been all of a sudden. We've seen the Bank for International Settlements, the BIS, the Bankers Bank, talking this week about how CBDC is a way forward for the bankers. I can't help but feel, actually, just between us, that also there's a certain element of relief, because they all thought they were going to be disintermediated about 5 years ago, and they've suddenly discovered there's a way to keep their central bank franchise going forward. But you mentioned this whole idea of rolling out new CBDC, and we've seen a few disasters basically out there where people have said, we're going to produce the CBDC, and they've rolled it out in 3 months and it's all gone horribly wrong, which is strange, because when they rolled out, for example, euro banknotes, I mean, quite sensibly, the European Central Bank took a year and a half to educate the population and spent a huge amount of money, hard cash, in order to manage to get people to work it out. So If someone walks in the door to you today and says, I am the central bank of insert name of territory or nation here, and I would like a CBDC, how long realistically is it going to take them to manage to implement that, John?
Excellent question, but I think the unfortunate wishy-washy answer is that it depends. It really depends on the goals. Well, first of all, it starts with the need. What is the need in that jurisdiction for a CBDC? And then you start from there. Then you built out the architecture and the feature sets. What are the policy objectives that this central bank is looking to achieve? Certainly, if it's a credible effort, and if there are genuine policy objectives, let's say, for example, one of the central ones certainly for the rest of the world, so i.e. the non-G7 and non-G20 countries, is financial inclusion. Certainly, if it's to achieve something like that, you're really looking at you're probably looking at something much longer than just a few months. Let's put it that way. It's probably an iterative, ongoing process that might take a year or three. Certainly, our experience with Sand Dollar in the Bahamas. Now, this is a hardened, stabilized system, right? It hasn't gone down once, and we're extremely proud of that. But we threw everything at it, right? We had to be extremely resilient to external physical attacks as well as cyber attacks. But that took us like almost 2 years to get it to that state, and we continue to build on that. And so I think it's really, to be realistic, it's probably a multi-year effort. You could probably start off small, though. Different features of it you could add on within a relatively shorter period of time. But certainly, we don't find the projects that propose to implement a full-fledged, very stable, secure, usable CBDC system within a matter of a short 2 or 3 months. We don't find those projects very credible. They're probably cutting a lot of corners, or they're trying to achieve objectives that are very different from what the stated objectives are.
Yeah, and I mean, there's just the pure educational process, as I mentioned before. I mean, you look at something like Aurora Coin, which was a lovely idea in Iceland, and certainly it got a lot of people motivated in the depths of the last recession, sort of post-2008, but ultimately they dropped all these coins to people, and then about a third of the population didn't manage to download their wallets, if I seem to remember correctly. And more importantly, there actually wasn't anywhere to go and spend it. So you ended up like that old joke about, buddy, have you got change of a zonk, the old Martian joke from my student days. And that obviously became quite chaotic. We got one comment. I'm going to give this, probably the last comment we're going to have during the show today. Ian Miller, thank you so much for your question once again. Yes, even crypto to fiat would surely alleviate threats, then making all exchanges fully regulated, or not at all. Regulation is obviously the way to go here. Amen. I think we're all with you on that, Ian. I mean, regulation has got to be the way that we go forward in this market, whether it's the CBDC angle, whether it's looking at the overall crypto to fiat business, or any other element therein. That's the really, really vital thing that we've got to do. Which leads us, therefore, to the opportunity to look to the future, the big, broad picture. Tell me, we've been discussing for the better part of an hour now CBDC and the future of money with John Kim. John, where do you think the capital market revolution goes next?
There's a saying, I'm paraphrasing here, in economics by the American economist Rudy Dornbush, about how in economics things always change a lot slower than you think they can, and then suddenly they change a lot faster than you thought they ever could. I kind of feel like that with something like CBDCs. Right now, all the headlines are focused around cryptocurrencies generally, but as with a lot of these things, the central bank digital currencies will truth be told, be much more transformative, in my opinion, in the coming years. The survey by the BIS is no joke. 30% of central banks, representing 90% of the global GDP, are looking to implement their own CBDCs in 1 to 3 years, and 68% within the next 6 years. That is a relatively compact period of time. China has been piloting this their DCEP for years now, and so many of the larger economies will follow suit. And again, the G7s have a different agenda altogether. I suspect that CBDCs will become a much greater transformative digital currency than any of the cryptocurrencies in the coming future. It just won't be as sexy. It may not be as headline grabbing, but that's exactly what the central banks like. Central banks don't like actually being in the limelight and in the spotlight. So again, once you have central bank level involvement in any kind of monetary policy, you see the transformations taking place within economies relatively quickly. The addressable market for CBDCs is in the billions. CBDC solves for the issue of piecemeal approaches to that private cryptos and nonprofit initiatives might bring to certain issues, including things like financing climate change. And again, once it starts happening, it'll happen and get implemented a lot faster than you think. Monetary policy, as we see it today, can be radically transformed. Right now, there's some blunt instruments, right, that central banks have access to. It's really money supply and the interest rates. But in the same way that data transformed the advertising industry, when Facebook and the Googles came along, advertising used to be a blunt instrument. You purchased advertising in the New York Times and you hoped that it reached the right demographic, the right people. And the returns weren't really apparent for many months, maybe even years later. But once you got granular with digital advertising and with the information that was available, you could almost in real time get the feedback of what kind of advertisements worked and what didn't. That was very powerful for businesses. And in the same way, with monetary policy using digital fiat, central bank monetary policy will be much more targeted, much more granular, and hopefully much more effective. So we're starting to see, we will see, I suspect, a large amount of sweeping changes as a result of CBDCs, more so than the headline-grabbing cryptos. Cryptos are sexier, CBDCs, again, much less sexier, but the impact will be far greater. And it's not a matter of 20 years, 25 years. This is 1 to 3 years, 1 to 6 years. It'll be upon us very, very soon.
So there you have it, ladies and gentlemen. Whether you're looking at Reedy Dornbush's great quotation in relation to the speed of innovation, whether you're discussing the whole concept of how interesting it is that we're on the cusp of this transformative CBDC wave, which is going to be driven by data. I think the advertising industry point is a really, really fascinating one in relation to CBDC and the future of money. Next week, we're going to have James Falk is going to be discussing Financial Cold War. That's his brilliant book that has just been published in the US and across the world. Looking forward to that show. This afternoon, this evening, this morning, depending on where you are in the world, we've had the joy of having John Kim as our guest today. He's the Chief Strategy Officer for Movmint. We've been discussing a multiplicity of factors in relation to the world of CBDC and how that's going to transform our entire monetary picture, whether you're in the G7, whether you're in the G20, or whether you're in any of the other nations and territories of the world. Thank you very much to our production team today. Thank you to our commenters and questioners, Peter Secon, Ian Bonsor, David Delahunty, Ian Miller, Simon Huckle, Bata Young, Jane and Marcus Ward. My name is Patrick Young saying thank you very much for watching. We'll be back same time, same place next week.